So markets on the rise again today. Part of that is a re-advance of the tech sector. Our next guest says thanks to AI enthusiasm, U.S. equity markets have been a story of the haves and the have-nots this year. Let's go to Alexander MacDonald, portfolio manager at Focus Wealth Management. Thanks for joining us today.
Good to see you, Marilla.
When you say the haves and have-nots, explain that a bit.
So we can quantify this if we look at sort of the year-to-date returns of the S&P 500. So going through the various sectors, at the top you have communication services. So that's Google, that's the Metas of the world. Year-to-date, they're up 25%. Coming down to the next sector, you have information technology. So that's the Microsofts, NVIDIA, the Apples of the world. They're up about 19% year-to-date. So you take those outperforming sectors and you compare it to an equal weight S&P 500 return. So that's if you were to take every single member of the S&P 500, weight them equally, and add their return up to get the year-to-date return of that particular index, that's only up 6%. So you can see there's a big difference between these large mega cap tech companies that have done really, really well and everybody else in the major indices. And it's that group of everybody else that we have been paying a lot of attention to recently. And we think there are some companies that have been sort of thrown out, maybe potentially written off from a valuation point of view, that could prove to be pretty compelling stocks to hold over the long term.
Okay, so the rotation we've seen out more recently where investors are moving more away from tech into other sectors, has that proven beneficial for some of the sectors or stocks you're talking about?
It's still early days. I mean, depending on the day you saw in November this past month, either it was or it wasn't. There's quite a bit of volatility amongst the tech stocks, when investors got more or less enthusiasm about individual names. Within the tech sector, you have seen investors, particularly on the retail side, rotate out of the NVIDIAs, which of course has been a high flyer for years now, into more of the alphabet names of the world. You saw them come out with their Gemini 3 model recently. That's been a pretty big success for them. And also they're starting to encroach on NVIDIA's territory with their versus NVIDIA's GPUs. And so depending on the flavor of the day, as we've seen over the last month, that either has or hasn't been beneficial. But longer term, we're not looking to hold these names that I'm about to talk about for the short term. We do think it's a longer term play.
Okay, so you have a couple of stock picks. I'm not sure I can get to all of them because we're running out of time today. But Verisk Analytics is the first one. They're a data company. Who are their clients?
So the top 100 property and casualty insurance providers in the United States are all clients of Verisk. Verisk is a data and analytics provider to the P&C insurance industry. It has about 3 billion data points that it collects based on premiums written, based on claims made in the insurance industry. And it sells this to their clients and helps their clients price those policies. So when they're going out, they're writing auto insurance, they're writing home insurance, these P&C insurers can make sure they're using all the data available to write those policies in a profitable manner. Recently, you've seen that Verisk has come off. It's down about 30% from its high this year back in July. There's some concerns about, first of all, pricing. It can only raise pricing as much as the underlying P&C market, the insurance market is doing. There's been some concerns about maybe a cap on pricing there. But also there's some concerns about whether it can compete versus AI products going forward. I mean, data is its bread and butter. Do P&C insurers all of a sudden want to bring in-house their own AI tools and then all of a sudden cut out what Verisk is doing? We don't think that's likely. The data, we think, is going to be hugely valuable going forward. Whether or not you have an AI model to put on top of that, we will see. And so we think Verisk is going to continue to be a very dominant player in that sector. Currently, as it goes now, its renewal rate with clients is about 95% every single year. We expect that to continue going forward as an integral player in that market. It's not cheap on a headline basis, but we're comfortable holding it over the long term.
All right, Alexander MacDonald, I'll leave it there. So thanks for your time. Alexander is portfolio manager, Focus Wealth Management.